Contrarians, welcome back to the Encrypted Capital recap for Wednesday, July 21st. First off, let's get into all this green on the board today. As mentioned in our newsletter, we talked about there being volatility leading up until the B word conference. And sure enough, Elon Musk said he owns Ethereum. SpaceX owns Bitcoin. And then immediately the narrative shifted. We sent this out to you guys just the other day, July 19th. Expect volatility today. We told you that Grayscale was unlocking 16,000 Bitcoins the other day. Overall sentiment was that it would be bearish for the market. As contrarians, my contrarians, we always like to do the exact opposite of what mainstream opinion is. So we are viewing this as bullish. And sure enough, we got all that green back, 31,700 for Bitcoin right now. Ethereum on that Elon Musk news up 9%. Look at that. XRP 6%. XDC 5.7%. Everything is reacting positively to Elon Musk. But if you go back and look at the overall sentiment, it was very, very negative the other day. And now what do we have when you look at Bitcoin news? Bitcoin surges 8%. Bitcoin mining isn't nearly as bad for the environment as it used to be. New data shows. Now the tables have turned. And you guys should sign up for our newsletter because you guys would be in the know and know exactly what our thoughts are so you can actually take advantage of these markets. So let's go over to Elon Musk here. He said Bitcoin was making positive strides and wasn't going to be as bad for the environment. He also said that he personally owns Ethereum and he still has a little bit of Dogecoin, but he also said it wasn't advantageous of him to go ahead and say what he said because he was invested in these coins, and that means he would be losing money, as if we're stupid enough to believe that the only way you make money is if a market goes up. It wouldn't surprise me one bit if Elon, Cathie Wood, Dorsey, and whoever this dork is over here shorted the market during that YCOP distribution period. We said in many, many videos ago, look for the billionaires to start talking about Ethereum. We were questioning, why isn't nobody talking about Ethereum? If all these big billionaire boys are involved in the club, they can go pull up a chart and do research and see that they would have way better gains in Ethereum. And the reason is because they were not done accumulating yet. They were not ready to let the public know that Ethereum was a good idea. And now Elon Musk is the first, but look for his other D-bag friends like Michael Saylor, Cathie Wood, Mark Cuban, and all these other tools to start talking about how awesome Ethereum is when you guys should be finding suppressed assets. Well, I do think Ethereum has way more value than Bitcoin because 80% of the projects are built on Ethereum. I do think that the gains are not going to be as great. If we look at recent charts, and when I mean recent, go back a few years ago, you can see that Ethereum hit $1,200. It was basically one cycle behind Bitcoin. So Bitcoin hit $1,200. The next bull market, Ethereum hit $1,200. So a price target for us for Ethereum during this bull run should be somewhere around $20,000, give or take a few grand. That would make perfect logical sense since Bitcoin hit 20 grand the last bull run. So even if that does happen, that's great. You get an epic 10x on your money. That's so epic if you really think about it. When you go back to all the other crazy gains you can get, a lot of these assets are still significantly off of their previous all-time high. While Ethereum has broken off and gone into new all-time highs of approximately $4,000, you still have currencies like XRP, which is still getting slammed in the media about them being a security. You still have those assets. XRP was what, $3.80 on some exchanges. It's only trading at roughly 57 cents right now. Still has 10x to go just to hit the previous all-time high, whereas Ethereum has 10x to go and it'll probably start gassing out. Yeah, you might get some gains in Bitcoin. Maybe you might double your money, but that's nothing compared to the epic gains that we've seen time and time again in previous bull markets. We have the SEC chair hints some stablecoins are securities. It says stock tokens and stablecoins backed by securities might be treated as securities under U.S. law, said the new chair, Gensler of the SEC. Important thing to note here is that Gensler did not specify any tokens in his speech, but We do know that Circle, the issuer of the USDC, and let's not forget that it's the center consortium that's made up of Circle and Coinbase. So both Coinbase and Circle created USDC. We know that Circle has been funded by Goldman Sachs from 2013 to 2016. You guys can check that out on their Wikipedia. And so Circle published the breakdown of their assets backing the stablecoin, but they have not been audited on what it is that's backing USDC. And we also know that Tether, which is the issuer of USDT, also said that its reserves included investments in commercial paper and corporate bonds. So Warren Davidson, the Republican from Ohio, said that you could easily craft a stablecoin that meets a test that says, no, this is not a security. My guess for that would be Stellar Lumens, XLM, as they are a non-profit. I believe that there is a reason they were set up as a non-profit, and most likely it is so that they can go ahead and bypass all this red tape about being securities. Also, we have BNY Mellon joins State Street to service new crypto exchange. It says traditional financial institutions such as State Street and BNY Mellon continue to get involved in the fast evolving cryptocurrency space. So we have Bank of New York Mellon joining a new cryptocurrency initiative by offering its custody support to a new crypto exchange backed by the United States bank State Street. You always have to question the timing of all this. Literally coming back down at support, 30K. You know how long it takes to go ahead and start these projects and start being able to offer custody solutions to your clients. You can't just do this overnight. It says, according to a Wednesday report by the Financial Times, BNY Mellon had joined a consortium of 6 banks behind the launch of London-based Pure Digital, a new crypto trading platform venture that is scheduled to execute its first Bitcoin trade in the near future. I was trying to find out which 6 banks those were. I couldn't find anything on it, but I have to think that maybe some of those banks are the same banks that are behind R3 and Corda. I also found a quote here from Jonathan Leader, who is a professional financial trader. He said BNY would not be involved if the government was planning to come down hard on Bitcoin. I am sure there will be more regulation, but banning it is now off the table. So you're not going to go ahead and develop these technologies and custody these assets if you really think that they're going to start regulating Bitcoin and basically making it disappear. They're probably not. It's probably always going to have to be pitched as a store of value if it's going to succeed at all, because we all know the transaction times are horrible and all they can pitch it at now is a store of wealth. It is not fast. It is not scalable. The network gets clogged up. All of these things make Bitcoin not the optimal technology to be used for business to business and central bank transfers and payments. Then I found this hilarious article from Carol Goforth. It says, it is time for the US to create a Ripple test for crypto. So I have to laugh when I see articles like this, because clearly it is obvious that Ripple is not a security. I did not buy XRP thinking I owned part of the company Ripple. That's not how it works. No one bought XRP thinking they actually owned part of the company Ripple. That's what a security is, thinking that you're going to buy an asset and it directly is impacted by how well the company does. If Ripple, the company, were to go away, XRP, the currency, would still be around. There you go. It's not a security. It's obvious. All you have to do is literally just do your research. Also, the EU plans to make Bitcoin transfers more traceable. It says the proposals could take 2 years to become law, but the Commission argued that crypto asset transfers should be subject to the same anti-money laundering rules as wire transfers. It says given the virtual asset transfers are subject to similar money laundering and terrorist financing risks as wire fund transfers, it therefore appears logical to use the same legislative instrument to address these common issues. So this literally defeats the whole purpose of crypto. People forget that fiat money is used for money laundering all the time. How is that any different? It goes on to say if you want to make real money, you have to follow the rules of real money, he said. Okay. So with that being said, I think that's going to do it for this edition of the Encrypted Capital Recap. If you guys like what you heard, please drop us a like, comment, and subscribe. Make sure you check out the newsletter. We got the free version and the paid version. Definitely help support the channel. And we will catch you all in the next video.